Morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning pre-market webcast. Okay, daily chart. And what jumps out at me here is we've been talking about consolidation. We've been talking about the tight bands. You can see it starting, the Bollinger Bandwidth now is peaking above 2.0. You can see the expansion in price. We have started on potentially an upper band ride. Well, technically we're in one. We engaged the upper band during Globex last night. We engaged it on Friday when we made that new all-time high. So there's the beginnings potentially of your upper band ride. There's a couple things that can kill a band ride. Two things have to happen. Number one, you can't engage the upper band for an entire session of Globex. So the yellow line there, you can't touch it during Globex, and you need to trade below the prior day low. Friday's low was 24.42. The new weekly pivot comes in this week at 24.42.53. So 42s on the downside. Absent a move below 42s, it's hard for me to take anything that the bears do very seriously. It's just noise. It's just dips to be bought. And as long as the dip buyers are willing to step in and continue to push things higher, then you're going to get this expansion to the upside. The bears need to hold their ground here in and around the upper band. This 40, call it 54 to 61 area. And they've got to go down and make some noise below 42. The ideal close for them today would be below 42. If you can close it below 42, you can go test the middle band down to 24.32s. And at that point, start to kind of chip away at an instrument, at a futures contract that wants to trade between the middle band and the upper band, which is also, anybody that's followed me, we've talked about this before. Between middle band and upper band is a buy dips environment. Between middle band and lower band is a sell rallies environment. So when we talked about, and anybody that's new, you can check out some of the webcasts from, a week ago, 10 days ago. We were having all of this resistance at the daily mid band. Those were rally sell opportunities. That came to an end on Tuesday when the 50-day exponential moving average and the lower band held, rejected, moved up above, but then you had just some very steady follow through. This is very typical of the bulls, and it's typical of the bears. Make a big old low, step in, and then start losing critical levels. Lose weekly pivot, lose monthly pivot, lose the daily midband. The bears lost those in succession last week, and they're paying the price with new all-time highs. So now they put themselves in a very bad position. The only thing that's going to solve it is converting 42. The earlier in the week that they do it, the better. If what we see Monday, Tuesday is confirmation of the weekly pivot as support, then what you're going to see is more of what we saw last week. Early week lows, grind higher through the second half of the week, which summer markets like to do. So the bears, they need to stand up here, or we're going to continue to grind higher. All right, everybody have a fantastic day. I will catch everybody for the midday update. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.